Are you a real estate investor looking to start your first flip? Are you a passive investor looking for the next opportunity? Regardless of your situation, our mission is to help everyone work towards their unique version of financial freedom. Hello, everyone, and welcome back to another episode of the Conduit Capital Podcast. I'm your host, Adam Burrow, and today we are going to be wrapping up kind of all of the talk we've done about funds and their structures and the differences, things to look for. The title of this episode is Different Strokes for Different Folks, because I think one overarching theme that I've really tried to hit hard over these past couple of episodes is, you need to figure out what type of investor you are, what sort of investment buckets you want to invest in, and then pursue those investments. And there are a lot of important questions that go along when figuring that out for yourself. And so I'm going to touch a little bit more on what different investors could be out there and maybe you relate to being one of them, as well as maybe some of my own personal experience on what I've seen and kind of how my outlook on being an investor personally has changed. With funds, maybe some of you in the investment world have heard the term accredited investor. There's also another term out there called sophisticated investor, and it's important to know the difference. It's important to know which one you are, and it's important to know what sort of investor type your fund requires you to be. So for the Conduit Capital Fund, we require that all of our investors are accredited investors. For Conduit Capital, this means that the investor has over $1 million in net worth, not including their principal residence, or they make more than $250,000 a year personally, or joined with their spouse, they make more than $350,000 a year. Those terms also extend to entities. However, if you want to invest with an entity, then the members of that entity have to be accredited, have to qualify as accredited investors. So just kind of a stipulation with that. The reason that we require accredited investors is, and why a lot of other investments do also, is because the nature of these type of investments tend to be perceived as more risky than something like the stock market. I'm sure that's probably, you probably got some people out there that maybe think the opposite. But regardless, we want our investors to meet a sort of general criteria where we know that not only do they have experience investing in things like this, but they're aware of the risks involved, and they kind of have the financial foundation to support themselves, even if the investment doesn't go the way that they plan. So it's just kind of a way to verify that the person is ready to handle, kind of the commitment that they're signing up for. And in our case, this is done by a third party. So it can be done by an attorney, it can be done by a CPA, or a financial advisor, someone that knows your financial situation that can verify that you meet one or more of our qualifications. Also, before you invest in a fund, you need to decide what sort of funds you want to use. So with Conduit Capital, we like to give our investors as many options as possible. So you can invest with us using personal cash, so cash in your bank account. You can use IRAs, Roth IRAs, 401ks, HSAs. The options are kind of endless. You can use an entity if there's some sort of LLC that you have that you want to use. That's possible also. So we really like to have a wide range of options for our investors. And many of our investors choose to invest with us using many different mediums, 2 or 3 different accounts at a time, which, we're always happy to do. It's a great way to get, as I mentioned in previous videos, those small dollar IRAs or that money that you really don't need, in those specific accounts to get that deployed. Part of verifying your accreditation, when you sign on with Conduit Capital, you sign a qualification profile that outlines not only how much you want to invest with us, but basically how do you qualify for the investment. So selecting one of those boxes, assuring that you are an accredited investor or you meet one or more of the criteria, if you're investing with an entity. And then we also need a letter from a third party that verifies that. And as I mentioned there, attorneys, CPAs, financial advisors, things like that. The nice thing about Conduit Capital is that I've run into several instances where an investor didn't have a third party that was able to verify their accreditation, and verifying someone's accreditation is a lot easier than it sounds. It kind of sounds like this big ordeal that's really scary and daunting that's going to take up a lot of your time. Our goal at Conduit Capital is to make things as easy as possible for our investors. So I assure you that the process is so easy. All we do is put you in contact with our attorneys in an email. They request some specific documents for you, and then they draft that accreditation letter for you. So not only does it make things easier on our side because we have a team of people that we trust to get that done for us, but you have all the work done for you. You just need to provide the documents. It's not like you're out there scalping random third parties to get you an accreditation letter. It's organized and easy to follow. And I'm always happy to help our investors do that. It's incredibly, incredibly easy for us to do. Let's see, another small point with the letters. Just make sure that your letter is recent and up to date. I can't speak for how other funds look at this. With Conduit Capital, we like to see that the accreditation letter was created within the last 3 months. Just because you never know what can happen with someone's financial situation. Maybe it can fluctuate. We just want to make sure that our investors are up to date and that all their financial information is correct, so that they're aware of the decision that they're making, and they, like I said, they have that financial foundation to back themselves up. Now, this kind of leans more into the different strokes for different folks, because just like how all funds are different, all investors are different too. You have different goals, different definitions of financial freedom, and at Conduit Capital, we want to be a stepping stone or a conduit for you to get from point A to point B, so your financial position now to the financial position that you want to achieve in the future. We really want to have a hand in that. And one thing that you should consider, when determining the path to A to B is, are you a passive investor or are you an active investor? So just to get on the same page, a passive investor is someone, maybe you're a high earning professional and you don't have time to sit in the driver's seat of all of your investments. So you want to deploy your money with people that you trust to earn a good return on that. Conduit Capital is a great option for that. We really do try to make it as passive as possible for our investors. Or maybe you're an active investor where, instead of being the person, lending money into a fund to have it, accrue interest or get mailbox money, you want to be the person out there swinging the hammer. You want to be flipping houses yourselves or growing your rental portfolio yourself. That's a great option too. And like I said, different people have different comfort levels with how they want to invest. I know personally, I've been really fortunate that I've kind of been in the investment world, learning from other people since I was in high school, and my goals regarding investing and my outlook on investing has changed, especially recently. I think growing up and seeing people pursue this super passive investing is it's really commendable, and it's awesome to see. All they do is wake up in the morning and they get all this mailbox money, which is an awesome goal to hit. For my personal stuff, I had to kind of qualify everything I was seeing, because I'm not 60 years old where I don't have this large amount of money sitting on the back burners where I can do passive as easily. So active became more important for me to pursue, as you're growing that nest egg. But also I've realized, for me, my comfort level, while I'll always want, some of my investments to be passive, I think I will always crave an active role in some investments. I think it's important, with your hard-earned money to still have a hand in it, because so many books tell you, and so many people out there tell you that, the hard part about wealth is not creating it, it's maintaining it. And if you're really focused on legacy or preserving wealth for future generations, keeping that money is important, and I think what plays a big role in that is how active you are in your investments. Now, that doesn't mean, at 60 years old, you need to be out there swinging hammers, but maybe that means in my case, I was thinking, maybe that means taking more trips to see investments, or putting a lot of effort into determining, what allocations you have in your portfolio and your different investment buckets, like I talked about previously. And I know that's kind of a tangent. It's more kind of just things that I've been thinking about, and different topics that I've talked about with Tom and members of my family, but always something to consider. And I want to provide an investment to our investors that they really need, that they're really looking for, where they have this missing piece of their portfolio where, maybe they are an active investor usually, but they're looking for a piece of their portfolio, a portion of their real estate investment bucket to be passive. And I want to be able to provide that service for them. But, I like to work with our investors to help see if that's really what they're looking for, because if they want 100% active, then I have no problem telling them, hey, we're probably not the place for you, and kind of going from there. But, to be a good steward of our investors' money, it really helps us to know our investors' goals before we start working with them. And then finally, one thing I just want to touch on too, that I talked a little bit about in the last video is there's a fine line in investing in things like Conduit Capital and these off-market investments, where you're trying to pursue this financial freedom, but at the end of the day, you don't want to become a slave and chained down by your investments. Pursuing things that offer one thing but produce another thing, or counting on income that doesn't end up coming to fruition, can really put you in a tough place. And you never want to be, or I should say, I as an investor never want to be in the position where, oh shoot, this quarter I have to make these investments because otherwise I'm messing myself in some other way. For me, that's not my definition of financial freedom. And it can be difficult to navigate that fine line when you're in the thick of investing and, hey, maybe everything's paying off and everything's going really well. Returning to that foundation of what are my investment buckets? How much do I want what percentage of my portfolio do I want allocated to real estate? And hey, at the end of every year, maybe I need to balance that down. And there are so many awesome groups and financial planners out there that can help you establish those goals. But it's important to, have those goals, that foundation there, because the private investment world moves really fast, and I've definitely learned that being a part of it. And if I can be a resource for our investors and kind of guiding them to determining what their goals are, then I'm happy to do that too. And as always, if we can be a part of our investors' goal to achieve financial freedom, if we can be a stepping stone or a connector in that way, we absolutely want to do it. So that's all I really have to say about kind of the different types of investors that I see with Conduit Capital and kind of our goals with servicing those people. If you have any follow-up questions, feel free to leave a comment. Anything that I didn't cover in any of these episodes regarding our fund, regarding funds in general, how they're structured, maybe things that you've seen that I didn't discuss, leave them down below, and I'd be happy to take a look at those and talk about those in further episodes. But this has been Different Strokes for Different Folks on the Conduit Capital podcast. I will see you guys next time. Until then, remember, be a conduit, not a bucket. See you later. Thank you for tuning in to our podcast today. If you enjoyed this episode and would like to stay up to date with all of our latest content, please follow us on social media. You can find us on YouTube, TikTok, Facebook, and Instagram at Conduit Capital Podcast. We love hearing from our listeners, so feel free to send us a message, leave a comment, or share your thoughts with us.